Today in this video of price action, we will learn about the most famous bullish reversal candlestick pattern, which is known as the hammer candle. I can guarantee that after this video, you will learn about the psychology behind this candle, which gives an indicator of price reversal which will definitely enhance your trading game. I know this famous price action rule, and let me tell you about that too, with the help of some simple examples. In this case, price is in downtrend and then reverses back after forming a hammer candle. In hammer candle, body is always small and candle wick is way longer as compared to candle body. Always remember that longer the size of the wick, better the candle will be performing. Hammer candle can be of two colors, either red or green. However, colors do not make any difference. In this case, according to price, action rules sellers have lost their control and they have started exiting from the market. At the same time, new buyers are entering in the market and are trying their level best to push the market further up. This is the reason why market has now converted from downtrend to uptrend. However, some sellers who are still holding their positions try their last effort to push the price down. However, remaining sellers start booking their profits, which results in weakness of strength of existing sellers. At the same time, new buyers enter in the market, and after eliminating all the remaining sellers, they convert the trend into an uptrend. I know most of you guys are still unable to pick this concept, so now we will understand with the help of some more examples. In this illustration, two big red candles are formed on bearish trend on the chart, which results in a downfall and price falls quickly. After such a big downtrend, new sellers are scared and are avoiding to enter in the market, resulting in price going down with the help of small candles. Now, interestingly, buyers are watching all these activities of sellers and decide to enter in the market and try to pull the market up, which results in formation of a hammer candle. After this, sellers again push the market down, but due to increasing bullish momentum, price reverses and continue to go in upward direction. Now let's try to understand with third example. In this scenario, price is in upward momentum after is making higher low formation pattern. But after some time, sellers enter in the market and reverses the trend by pushing the price down. This activity of sellers results in formation of support area. Now, as soon as price reaches the support zone, then due to decrease in selling pressure, sellers start booking their profits and new buyers start marking their entry positions, and hence market continue its previous upward trend. Now here is a disclaimer. You can just enter in a market by seeing a hammer candle only. You also have to witness where support area is being made. In this next example, market is following an upward trend by making a higher lows formation. As soon as market makes a new high, old buyers book their profits, which results in a small corrective move in price. Now, due to previous market high, a support line is formed from where new buyers plan their entry, resulting in formation of a hammer candle on the chart. From here, market continue its uptrend after taking the support from moving average and support zone. In this situation, buyers have used this hammer candle as their fresh entry point, and most importantly, you can also enter in the market, but after confirming from other key factors like support zone and moving average. If you want more videos on price action and ICT, then do like and subscribe this channel for upcoming informative trading videos on your feed.